So I'd like to welcome everyone to One-to-One Mining Investment London. I hope you have a very busy day, 2 days full of meetings and networking and a few discussions. So I'd like to start with our opening panel. So joining me this morning from closest to me, we have David Freeland, Portfolio Manager at Drakewood Capital. We have Kruthika Bala, Vice Chair, Women's Energy Network Alliance and Managing Director at Resources Now. We have Fiona Clouder, Chief Executive at ClouderVista, and Cailey Barker, Managing Director at Xcelsior Capital. So want to thank everyone for joining me this morning. And so just to start things off, maybe we can just have a quick introduction from each of you, and then we can get into some of the questions.
Good morning. David Freeland. By background, I'm a physical sort of base metals trader, but I now work for a hedge fund called Drakewood Capital, and we have a mine finance debt fund that we're just establishing. I'm based in London.
Hi, my name is Kruthika. Kruthika Bala, Manager for Resources Now. I run a high impact advisory. I focus on the intersection of geopolitics, energy transition, and critical minerals. A lot of my work now centers around understanding the future energy systems and the need for critical minerals to power that future functionality and the scalability of things.
Good morning, everyone. I'm Fiona Clouder. I'm a former diplomat. I was ambassador to Chile and the regional ambassador to Latin America and the Caribbean for COP26 on climate change. I now do consultancy, both in my own right and also with the Ambassador Partnership. One of my main clients is Appian Capital Advisory, a major investor in the mining sector. So my interest and focus is really Latin America in all senses, but what I'm particularly interested in is the interface of mining, energy and environment issues.
Cailey Barker, geologist, analyst, former portfolio manager at BlackRock, and just joined Xcelsior Capital, which is a mining finance vehicle for critical minerals backed by commodity trader Wogan. So it's mainly niche, off-market critical metals, so non-LME. Just joined last week, so be kind.
All right, thank you. And so as with all of the panels, we want to keep it open to discussion. So if you do have any questions at any point, just put your hand up. We have a microphone that we can bring over to you. But I thought we could just, kick it off talking about geopolitics, which are really kind of the main topic of the day. So looking at Trump's tariffs, counter tariffs, threats of a trade war, all of these, how is it impacting the metals and mining industry today? So, how are investors and pricing analysts really just making sense of where the markets are heading and what might impact them on a daily basis? So maybe we'll start down at the end this time.
Look, it's, I would just say this sort of security picture, broadly speaking, is become far more prominent over and above what was previously a very strong rhetoric in regards to sort of energy transition and decarbonisation and the sort of green world. So we've had this quite dramatic shift from powering the world to a new future, which hasn't gone away. It's just the rhetoric, the focus of the rhetoric has shifted to resource nationalisation and security. We all know that's been predominantly driven by Trump and what's going on in the US. All I can say with any vague certainty is that it will be very uncertain. When Trump got in last time around, I was at BlackRock, and I can remember all the big powers of BlackRock with all their macro geniuses coming up with loads of ideas about what would happen and what it would mean for the world. And I would probably say 80 or 90% of it was wrong. I would think that we're probably going to see the same thing again. And Trump will continue to create a lot of noise. He will continue to create a lot of volatility in commodity markets, subsequently Forex. He's going to sign a lot of executive orders, which mostly mean nothing in the world of sort of mining and permitting, which is incredibly difficult in the US. but one is certain, and that's uncertainty.
Well, I think you've summed it up very well. But uncertainty is always something that's always been with us. I mean, it might seem a pretty turbulent time now, but worth reminding ourselves that we just came through a global pandemic. There are conflicts, of course, emerging all over the world, natural disasters, etc. The world is an uncertain place. It always has been. It always will be. There is someone across the Atlantic perhaps adding to some of that turbulence. But I think what's very important is to take that long-term view. As you've said, there is an increasing focus on minerals for security and defense issues. I myself also work with RUSI amongst other things. But I think it's important to bear in mind that the certainty in all of this is that climate change is happening. There needs to be measures to address that, which involves an energy transition. That has not gone away, whatever Mr. Trump may say. Also, for our industrialized economies in the world, provision of minerals continues to be absolutely paramount. There is a huge supply gap looming in a number of minerals. And so all these things of industrialized economies, energy transition, energy security, security and defense issues means the mining world is very important. That's one certainty I think we should hang on to. The other thing that I feel we often don't address is the urgency of this agenda, that whilst there are different political views, different ideologies, arguments about what measures are best for our world of the future, the point is that climate change is happening. That in itself is going to really exacerbate the turbulence in the world. And we need to address that with urgency, and that needs more mining, more minerals. And that's what I think is important about this conference, and about all of us that are involved in this world of mining.
Yeah, I'm going to just build on Fiona's point and Cailey and possess the point that energy security is absolutely the utmost priority, but it need not be mutually exclusive with climate adaptation. Those two things go hand in hand. I also want to bring another interesting point from the IEA on the age of electrification. I was recently, last week in Washington, D.C. on the electrification forum. And the idea of the fact that we need these future energy systems to be operating in a way we've seen the Iberian blackouts. There's lots of theories and viewpoints that we see out there in the market. But the fundamental of all of that remains that we need our energy systems to be modern. We are also moving a lot more into a digital platform, and digitalization and electrification needs minerals, critical or otherwise. And the most important bit in there is also, let's not forget about transition metals like steel, iron ore, also low carbon solutions like uranium, for example. These are part of our future energy mix, particularly in Britain. When we think about our future energy mix, we're thinking about, we'll still have gas to a great extent. We're also betting on uranium, nuclear, which needs uranium. So energy of all forms is extractive, generally speaking. And a lot of it is powered by whether it's critical minerals or not, but they are from metals and minerals. So there is a real urgency in terms of modernizing our energy system, digitalizing our platforms, our smart grids, and therefore, although there is Fiona very beautifully said about the fact that the climate change is there, but I also want to reemphasize that a lot of the conversation right now is focused on energy security and resilience. I wouldn't really talk about sovereignty there because our energy systems are interdependent. We are dependent on each other. The system is inherently dependent on the physical world and the digital world, and both the physical world and the digital world need metals and mining. So it is a fundamental block. So there are plenty of drivers currently in the market to get this momentum going. Particularly, I want to get to the tariff point. Tariff has structurally lifted the prices but capped the upside. Now, policy uncertainty is as important as a shutdown or a movement of goods or commodities right now in terms of fundamentals. So those are the two really critical points from tariff that I want to talk about.
When we talk about geopolitics, I think think a moment about the sort of positives and the negatives there. So on the positive side, we've seen a lot of developments in the last couple of years. And for example, the elections recently in Canada and Australia, there was a big emphasis on sort of mining and developing projects that really came to the fore in those two elections and played a much bigger role than they normally would. And then, of course, in the US, you've had the executive orders that came literally as soon as, the new White House administration was there. And, we've seen a big push there to try and either sort of, speed up the process for permitting. That does seem to be really have an impact in the US. They've identified what they've called the Fast 41, which is sort of 41 sort of critical metals projects within the US that they're going to prioritize. And in the same way, in the EU, you have, I think, 47 strategic metals projects that they've identified and they want to push forward. So, with these initiatives, it should really help push forward some of these projects. And, there's a huge difference if you look at, for example, permitting a project in North America compared to Australia. What could take 5 years in 5 years in Canada or the US could be 2 years in Australia, right? So it's a much longer time frame there. And that, the idea is that perhaps by simplifying the process, and then sort of taking out the bottlenecks between a federal or a state and provincial level, you actually expedite the projects and, things happen more quickly. And I think that's obviously a great positive. I mean, we're already hearing from some of the people in the US, have projects that getting permits for drilling in the US is already this year. It's happening. So, any help that the governments give obviously is a great help there. And, a lot of these projects, should be expedited by those changes. On the other hand, of course, the geopolitics, we are, as a trader myself, volatility is a good thing. We sort of welcome that, right? But if you're building a project, volatility is not always great. And I think the uncertainty that goes around a lot of events is a real problem. If you're, and a good example of that would be, I'm involved in one project, which is in Indiana. We've spent 3 years doing the engineering work, which is now complete, and we're kind of ready to go to start building. And then in January, when we went to the sort of EPC contractors to try and get a costing for building something that costs, say, $500 million, normally you'd get a project and you'd get an answer back within a few weeks. And they actually said to us, look, it's January, we've got a new administration coming in. We absolutely, we can't give you a price right now. And the two reasons for that, one was inflation. They literally had no idea what inflation would be because, you're talking probably about a 2-year period. And secondly was construction, it's labor, right? So construction for a project of this size, labor is important. And they didn't know, whether Mexican workers, for example, would be available. And so they, we'd never ever in my career seen that where, EPC contractor would say, oh, look, sorry, we'll have to come back to you when things are a little bit steadier, right? So, that sort of almost paralysis that you have is obviously a negative. So I think that's not helpful at all. It's only in our case. What we've seen, I think, is, this uncertainty has obviously been very good for gold. So gold projects really have risen to the top. And for base metals, the uncertainty is absolutely a problem. If you have a recession, then the base metals are the ones that tend to suffer from a demand side. But gold kind of acts independently. So I think we've got a bit of a split there between gold projects, which are absolutely doing very well, and sort of base metals and other, say, battery metals that are not performing quite so well.
Maybe we can look a little bit deeper into those kind of commodity adjustments and, the way that they've been reacting to geopolitics and everything going on in the world. So obviously we've seen record high prices in gold, a push towards kind of those security minerals as well. So, what's interesting at the moment?
Well, I mean, yeah, and I probably started off with a relatively negative note, and I would actually say I'm incredibly positive about the outlook for commodities broadly, because what's going on in a 4-year term does not dictate what goes along in decade-long cycles. So, and we've seen that what in particular small commodities, like, for example, antimony, which the world is it's a tiny little market, and it's very fragmented at the moment. You've got two prices. If you are lucky enough to try and find a price, you'll find 60,000, which is the global price. What they're getting in China is half of that, because China's closed doors at the moment. So we're going to see more of that kind of fragmentation. I think we'll see more as well. We've seen that already a little bit, like with nickel, for example, battery grade versus, what goes into stainless steel, things like that. So you're going to see, I think, more disparate markets, more fragmentation. But I think the general trend will keep going strong. I'm very, very positive about gold. I think gold, in these uncertain times, particularly in the short term, who knows longer term, anybody's guess, but certainly in the next few years and certainly through this period of volatility, gold is going to continue to do well. Interest rates falling. No idea what's going to happen with the US dollar. We've seen record inflows into, not record, but inflows into ETFs, which we haven't had for a long time. Central bank buying's very strong. The biggest driver is investment demand by far. You can look at all those factors within gold. So gold, I'm very positive about. I think, to David's comment, some of the base metals are, they're just going to be wobbly, but these are good prices. Companies should be making good money at these. What the difficulty is sanctioning new projects. And that's where, what kind of price do you plug into a model to give the stamp of approval from a board of directors to go ahead with the project? That's going to be very tough. But overall, I think a lot of these commodities are still going to continue to do well.
Yeah, I'll leave the financial experts to talk about market prices. But again, as you've said, it's this long-term pattern, and the reality of the urgency and the sheer scale of what's needed. So projections are, in the next 5 years, there will be a deficit of something like 46% on graphite, 42% on cobalt, 34% on lithium, 21% on nickel, 15% on copper. So actually addressing those deficits needs enormous investment. And the problem is this time frame, even though governments are starting to take measures, for example, on the permitting side to speed up the processes, that's not going to catch up fast enough to supply what's needed in the necessary time frame. So to me, the competition is going to be increasing, which will drive prices up.
Yeah. Just to put it in simplest terms, I agree with everything Fiona and Cailey said. We are going up an escalator that's coming down faster than we're able to go up. That's really the pace. One is the industrial decarbonization. The other one is the energy transition bit. Although there is a lot of viewpoints on whether this is an energy addition or transformation or transition. Well, probably won't go into that debate now, but what really it does mean is one track is on the industrial decarbonization side. We need a lot more. There's plenty of drivers there. So there's no shortage of drivers, but we really want to look at what the potential headwinds are. Is again, going back to the original point on, are these tariffs helpful? These are primarily set because it's no longer about the resource geology. It does not matter where it comes from, but it's become more important about where these are processed. And as we all know, that a lot of these are processed in China. And a lot of these policy positions are coming at the back of that. And that's mainly the key driver of whether, there's always a saying when we think about policy, and Fiona probably knows this very well, it's like companies can deal with good policies. They're also equally prepared to deal with bad policies. What we can't deal with is uncertain policies. But again, going back to your point on, the industry thrives on this volatility and that uncertainty. And I think my old boss, Ian Bremer from Eurasia Group, used to say, this is like a New York taxi. It needs to rain just enough for people to get out of the house and hail a cab. But if it rains too much, people won't leave the house. But I think when I think about the current environment, as I said, there are plenty of drivers, plenty of headwinds as well. But I think this is the New York cab situation where you get out of the house and you hail a cab and it's just the right environment there. It really depends on what kind of projects, assets. Not every commodity or an asset class is getting the necessary attention it needs. One of the things is there's also a question about how we just lost our way in this whole green transition bit. So my view on that bit is how do we combine multiple sectors? So for example, nickel is used in green transition, but is also important alloy for defense critical minerals. So our emphasis on looking at particular sectors or segments where it combines both green transition and that defense part of it, because we are thinking about modernization of both from a NATO's point of view as well as the rest of the world, where there's a lot of defense modernization projects that are happening, and we need a lot more metals. And then that raises an important question. I wonder if the panel has a view. Is that then that creates a resource competition? Where does that particular asset go? Is the priority going to be on green transition, or are we going to prioritize defense? The answer is probably whoever pays more. I wonder what you think about it.
Well, I mean, looking from a sort of debt fund point of view, then, there is a big difference really between, if you look at, top of the list for us is sort of base metals projects like copper, I mean, gold as well. But, a lot of the opportunities we see are absolutely in that space. If you look at the other end of the spectrum, when you've got something like sort of the critical metals that we talk about, whether it's tungsten or antimony, it's a much more complicated process, right? So for example, if we have a copper project or a gold project and we're putting debt, we can easily hedge that price risk. But if you're looking at something like tungsten, it's much harder. The processing of the minerals is much harder as well. If you look at a copper or a zinc process, it's pretty straightforward. I know I've looked at quite a few tungsten and sort of antimony plants recently, and it's much more complicated than things I've seen in the past. So, and that's why a lot of these the processing side of it has moved to China in the past few decades. And, even now, if you speak to, someone's got a project on one of these critical metals and you speak to them, then the chances are they know that product is probably going to go to China. And, that's the problem that, in the last few years, in the EU and sort of Australia and the US, those abilities to process these critical minerals and metals is, it's kind of gone away and closed down largely because it didn't make any money. I mean, now, for example, you see zinc smelters are able to, recover, gallium. And some of these, they will look at doing so, but only if it makes money, because historically it just hasn't made money because there's been the competition's been too great. So I think, they're going to need some support from whether it's US or EU governments, Australian governments, to be able to process those metals as well. Because at the moment, if you look at it, as I say, from a debt point of view, it's much more straightforward to look at something like a copper project than something like a tungsten project. And so, that's a big factor for us.
And that just to add to that is a very important point he mentioned there. And that is really boils down to the cost of electricity prices, the cost of energy. And the fact that China is able to do that is because China is a coal giant with green hands all around spreading across the world. And that's the prices of electricity matters because that's an input cost. And I think you raised a very, very important point there. Just wanted to.
I think also, China has taken for decades a very strategic view on these issues and therefore has cornered the world in terms of processing. And of course, what we're seeing in these trade wars is export restrictions, etc., and geopolitical games. And we've just seen overnight, though, that US and China, there has been progress in the weekend talks, that the tariffs on both sides have dropped dramatically, I think by something like 115%. So US tariffs on China are going to be 30%, Chinese tariffs are going to be 10%. So that's another sudden shift. But I think David has highlighted something very important, which is the approach to be taken by governments in the future. We've got the G7 meeting coming up soon that will be looking at critical minerals as a key item on the agenda. So I think an interesting question is to what extent the G7 countries will look at perhaps pooled resources in terms of how they can develop collective partnerships. And I also think whether it's multilateral or bilateral, something that governments need to pay more attention to, is a more integrated approach on this agenda, that it's not just about the business transaction on the mining side. It's about the relationship with the country. It's about the investments going into infrastructure, again, where China has taken a very strategic approach in key countries around the world. And it's also about the wider benefits that can come that bring social and economic development in those countries with the resources. And in my view, there's not enough attention being focused on that at the moment.
All right. So how is this kind of this focus, the very not conflicting demand sides, but there's a lot of demand for metals. How is that translating into investment into this industry, such as the juniors, which we've got here today?
Not very well, sadly. It's a tough market out there. I get asked all the time, and particularly when I was at BlackRock, why aren't the junior end of the market? Why is there no love? Why aren't they great projects not getting reflected in valuations in share prices? And the fact of the matter is, the mining industry now, sadly, is just a very small part of the world. And we're very, we see it, and we see what is very blatant to us in a small echo chamber. But you can buy the whole mining sector can be bought by Nvidia. I mean, it's $3 trillion. The mining sector is probably $1.5 trillion. It's a 3% of the MSCI World Index. So it seems like a big industry. It's certainly a very important industry, but it's very small to your average generalist investor. And I used to have this conversation with my generalist colleagues at BlackRock all the time. And all they wanted to do when they wanted exposure to the mining industry was they would just buy a BHP or Rio or Freeport or something like that. So it's very, very tough. I am very positive about the junior sector because of the commodity drive. And really what's going to flip it, that would be your next question, is like, well, how's that going to change? How are we going to get money into the sector? That's got to come from the generalist community, because the resource community has been a shrinking pool, largely taken from sort of ETFs and more passive type funding structures, which is why the corporate side of the business has had to do more investment. So the big guys have been funding the junior guys. But the thing that's really going to change is when the pain is too difficult to ignore. Like most investors in the world have FOMO, guilty. So when the pain of not owning juniors is worse than the pain of owning them. That's when you get that flip. I still think that's quite a way off. So this sort of ongoing trend, commodity prices keep going up. We started to see it in certain markets. Gold juniors in Australia, for example, doing a lot better than Canada. There's good funding there. If that sort of momentum continues, if gold companies, for example, or any of the other commodity companies continue to deliver on their assets, pay good dividends, generate cash flows, that'll all feed down to the junior sector.
I think the key thing is that juniors have to be part of the equation to generate sufficient minerals for our world of the future, but not enough attention is being paid to them. Part of that is to do with public perception of mining. Your average investor sees it, I think, as a very risky sector. There's all this uncertainty, all this geopolitical turbulence doesn't help. And there's the historical perceptions of mining. Now that's slowly shifting, but that's something that needs to change. But also what strikes me, and I see this from the other side, because I'm also a non-exec director of something called Chilean Cobalt Corporation, which is a junior trying to raise money. And gosh, is it hard. And trying to get people to understand the asset, trying to get people to to link in, to me, there's something in the junior sector about building a broader ecosystem, that obviously all the juniors are in competition with one another and they all think they've got the best asset. And if only people will invest, then you'll make your fortune. But there's something to do, I think, with also coming together, in exchanging experience and expertise, in looking at scopes for partnerships, and in particularly making use of innovation. And that's also something the big players could do much more, I think, to nurture. And I originally, a long time ago, had involvement with the biotech sector, and I think that's a very interesting parallel as to where a new sector grew, essentially by being nurtured, the whole ecosystem, by the big players. But over to the financial experts.
I'm no financial expert here, but I'll add 2 points to it, and I think I agree. It is a bit disappointing that we haven't seen that investment in junior miners. And two things are critical matter to me. Is to have a very clear line of sight on the offtake agreements. And the second point on that is to focus on the minerals that are on national lists, DOEs, DODs. There was a fantastic example. Amy, you were there at PDAC and we were listening to about a cobalt asset, how it is part of a DOD list where they were able to finance it and get things going. So it's really important to make sure that it is in some national critical minerals list. It's part of DOE, DOD, export finance backing there's another list on the export finance backing categories. Those are the two clear pathways that I can add in addition to what Cailey and Fiona said.
Well, I have a database of mining projects, all juniors, none of them in production. And if you like, it's split between three different sectors, which is basically Canadian, which is the largest part, UK-based, and Australian. And I've really noticed recently that there's been a big split between the Canadian ones, for example, have definitely outperformed. So, for example, compared to this time last year, the Canadian companies are up 25% on year. The AIM companies are absolutely flat, haven't done anything. And the Australian components, the gold ones have done well and the base metals ones have done very badly over the last year. And overall, it's kind of just vaguely positive. So clearly an outperformer in Canada. So I've been looking at why, what's helped those companies sort of get buying interest and actually, okay, you could argue that the quality of the projects is better. But I think, the good projects have been attracting money and have taken notice, and they're the ones that have progressed. So I think if you do have a good project and you're able to progress it, then you're still able to, and actually the reason that the Canadian part has done well actually is because you've probably got 5 or 6 of those companies of around, say, 35 that are up, say, 300%. So those 5 companies have bumped up the average of the whole lot to take it to 25%, right? And that's, as an investor, what people look for. They look for the successes, right? And not the ones that gradually decline and raise more money over time and just sort of go nowhere. But it's great to see that some of these projects are actually doing well and are actually going to get into construction and get built. And really, for investors, that's what they want. They want the success stories.
I mean, you talked quite a bit about kind of attracting the generalist investors as one of the key ways to kind of revitalize that interest into the market. How do we do that?
It's a long education process, and I think I recently saw a piece on when we're talking about defense critical minerals in particular, and there seems to be an ethical debate of should we invest in defense. I think we just need to get over that hurdle a little bit. There's a lot of questions around the ethics and morality of investing in certain types. But we all need physical security. We all need, the lights to turn on when we press the buttons in the morning. almost anything and everything in our everyday life comes from mining, and without which. So I think we've just got to really educate, and that's a long process of educating. Some very interesting insights from, say, for example, Church of England's investment in Anglo-American, and those are really interesting ways that we can build, but it's also the capacity to connect two things together. And that's the big problem in the industry. And again, going back to an event I was at last week, and it's a whole bunch of utilities who were talking about how they're going to upgrade utilities using digitalization. But the fact of the matter is that where does digitalization comes from? How do we digitalize is from critical minerals. And I think people were unable to make that connection. So there's a lot of education that needs to happen and to connect the dots. Besides that, I really can't think about anything else. I feel like we just need to re-educate ourselves with a lot of these things and connect the dots.
Yeah, I mean, I would just say it's sort of, three things. One is size. The bigger the industry gets, the more attractive it is to a larger community. Two is perception. And, even investors, generalists that have some hair, just remember the sins of the past of the mining industry. And it's still considered a sort of, this is not a sector that I can make a good return on. I think that has changed dramatically, and companies are in better shape than they've ever been in. So that's slowly turning the corner, but it has to just keep happening. So actually, creating value for investors. And then the last point, I think, is just branding. I don't really like the word mining industry. Actually, I'm not a fan of it. I think it should be I don't know why we call it it's a doing word. Mining is a verb. So, we don't call the oil and gas a fracking industry or a rigging industry. It's a minerals and metals industry. That's what we do. And I think, a rebranding exercise could be helpful too.
Hi, great panel, by the way. Wouldn't you think it would be the responsibility of the majors to participate in that branding like every other sector does to attract the generalists? They're literally doing nothing.
Yeah, great question. I don't... Not enough is the short answer. So there's sort of pockets and there's sort of some desires. So what would be a good example? Like Anglo-American had started to do that, previously. Tech, for example, they've massive shift around in what they're doing. They're now completely a critical metals company. That's a great poster child for the Canadian, for the whole country, right? In Canada. So those I think are good examples. They're trying to do it. They're big, stuffy industries. As difficult as it is, it's like bringing in new innovative technology into the sector. It's a very long business, and it takes time to bring those changes in. I think it will happen. We just all need to sort of do it all together.
I think there is progress. If I look back to when I first got involved in this sector over 10 years ago in Chile, I can see an enormous evolution in companies' approach, the whole focus on more responsible mining, sustainability, innovation, etc. I also think the ICMM, which of course brings together all the majors, is doing great work on this agenda and trying to shift the profile of the industry. But it isn't just going to happen from the industry alone. And my main observation is the industry is still a very insular one. It's very good at talking to itself and talking to itself about how well it's doing and where it needs to head, which is good. And that common understanding needs to be built. But that's not projecting it to the outside world. And what I think is needed much more is a cross-fertilization and dialogue between governments, the industry, and particularly the finance sector, and to look at solving some of these problems in a more collective way.
Well, yeah, also, I mean, we do have to sort of acknowledge that there's a lot catching up to do sort of outside China for a lot of these critical metals. And one example I would give is, so I work as a consultant to a Nigerian company that exports products out of Nigeria. And they could be base metals like zinc and lead and a little bit of copper, but also we do rare earths. And, we originally sold all the rare earths to China. And we did make an effort in the last year to try and also take some material to other locations, particularly the US and Europe. It just hasn't happened. We've been trying as hard as we possibly can. We've sent samples and we've had a dialogue. But there's a big difference, right? With China, we get a price pretty much straight away. And the contracts perform very well. But also, the Chinese end users will normally, one of their guys will jump on a plane and head over to Nigeria and check out the facility, make sure that it's operating and it meets their standards, etc. And we haven't had that at all. No one's even shown an interest from the EU or, anyone from Europe or from the US to do that. Even though they claim they want to buy these products, right? Because it's all rare earths. They haven't actually really done anything about it. We'll send a sample, weeks and weeks go by, no answer, right? Well, you just absolutely don't get that when we speak to the Chinese customers.
Thought we could just kind of wrap it up looking at, we've talked about energy security, climate change, kind of all of the differing impacts on the market right now. What would you say will be kind of some of the key focuses or key themes for the coming year?
Security.
Competition between countries. I think actually coming out of all this turbulence over tariffs and trade wars, countries are becoming ever more conscious of their national positions and what is needed for their future economies, energy security, defence, etc. So I actually think we're going to get more competition between countries.
I would say 2025 is all about alignment, agility, and execution. The winners are going to be the ones who can operate in a relatively secure jurisdiction. And I say relativist because it all depends on how you compare. Produce multi-use critical minerals, not just for energy transition, but also really look into the defense part of it because that's a big agenda. I think you were talking about this permitting momentum. That really needs to improve. I don't know what the magic pill for that is going to be, but I'll throw that out there. And the main point is strategic capital is back. We just need to find the alignment on that. And I go back to my point that I said before. It's to align the assets and the types into those national minerals list. That's where we show the alignment. That's where we can show the agility, and then execution follows. Those are the only three things I can think about.
I mean, from an investor's point of view or a debt point of view, debt finance point of view, I think, you just got to come back and look for good projects. If you have a good project, then, there's much better chance of it actually happening and getting built. And hopefully that likelihood increases because of all these changes. But, certainly with some metals, as you get into sort of more the critical list, some sort of government support is going to be essential. Whether that's pushing the projects along or making it easier to develop the projects, that's really going to help some of these projects actually come to fruition and get into production.
All right, so that takes us to the end of the panel. I want to thank our panelists, David, Kruthika, Fiona, and Cailey for joining us this morning to kick things off.